Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again in the gold market. So yesterday, actually there were only two major events: a revision of the gross domestic product, which actually has made very minor impact on the markets, and second, the debates with the president candidate. So those of you who were watching, maybe it's actually, speaking shortly, these debates were sucked actually. It's nothing worth to watch, just even don't want to comment this, so it's hardly could be called as a debate. So obviously they also have made no impact on the performance of the markets as well. As you can see, even on the domestic stock market, they were make no impact on the performance. In the meantime, you can see the gold shows minor pullback here, but in general the things that we talked previously stands the same in terms of the higher time frames. I mean weekly, daily basis trading. We said that probably we could speak about taking the long position only at the nearest support area when the market will reach it, because we have a directional bearish pattern on the vehicle chart, which is double repo of sell, and even this level doesn't fit the idea of the double repo, because double repo suggests drop at least to the 2160, but at least this is confluence, and here maybe we could get some bounce. So we could speak about the possible consideration, at least some bullish setups that might be formed. Besides, if we'll take a look at the futures market on the COMEX, you will see that despite this upper direction, trend remains bearish on the daily chart frame. So here, as we see that it's bullish on the retail broker chart by the MACD, but on the COMEX it's still bearish. And here market is forming actually very similar performance than this one, but in opposite direction. So we have the bullish engulfing pattern, and here, depending on your risk aversion, you could consider a few options that you could try to follow. Of course, currently we could speak only about intraday charts. Also, don't forget that today we'll get the personal consumption expenditures, which could make impact on the market. So on the 4-day frame chart, what we have: first of all, long-term bearish patterns are still possible to be formed. Even this butterfly, if even market will keep climbing higher, so until it stands inside of this range, sliding range, the bearish patterns might be formed. And as we already talked about this, for considering taking any short positions, we have to wait when the market will reach some points that is stand near to invalidation points of the patterns that we're considering. On the higher time frames, that's probably somewhere closer to the 24 invalidation point of the double repo pattern. If bearish patterns might be formed, I don't know, some kind of the A, B, C, D pattern, right? So if we'll get this big pattern, somehow it will be formed. This might be considered speaking about this butterfly, so it's somewhere closer to this level. Besides, on the intraday charts, we have some bullish minor patterns, and I do not see absolutely no reasons trying to argue and taking position against them. So once they are forming, let they go working, and once they will be completed, we will take a look once again on the situation, whether it will be interesting for considering any short positions and so on. But currently, be stubborn and try and take short position when you have on the ground potential bullish positions on the intraday charts, bullish patterns. I don't think that it's really a good idea, because if you take a look right now on intraday charts, first of all, as I said, on the daily chart we have the engulfing. On the lower time frames, take a look, we could get the shape of the hand short. So if you remember, we said that yesterday, despite the section has started, we said, well, it seems that we could consider taking any new long position if we will get some patterns. And currently you can see that this pattern theoretically might be formed. So this might be the left shoulder head. This market will rise to the 23, approximately 40, 23, 35 area when neckline stands. This might be completion of the major part of the hand shoulders. Then you could start watching for forming on the right arm to take the position with this pattern. That's theoretical that we could consider. Alternative way, as I said, if depending on your risk aversion, so if you're ready to take position for the personal consumption expenditures, you could try to deal directly with the engulfing pattern that we have. Because recall what has happened on the previous engulfing. It was drop, minor retracement, market shown extension. So we've got some kind of the ABCD performance. Here's the same. So we have the shape of the engulfing retracement. Theoretical market could start upward action right here. Besides, if even late hand shortage will be formed, market return right back down, the entry price, which is equals to the left bottom side, right left arm bottom, will be standing approximately in the same area. So from that standpoint, you could maybe split the position. So take some minor part with the engulfing, then watching for hand shoulders. If it will be formed, you could add more and get some average good price for moving with these potential patterns. That's for those of you who would like to try into trading these steps. So, but speaking in general, gold market right now seems a bit choppy and indecision market. So, because based on the high time frame performance, this is not quite that we could expect from the double ripple rise, right? Especially after significant sell-off that we've got. This is wobbling action sideways performance that now started taking shape of the triangle consolidation, which is not typical for sharp directional reversal bearish patterns, which is a double ripple sell actually. And that make me have some doubts concerning significant drop here. So it started looking bullish. At the same time, on the intraday charts, with this choppy widening consolidation, difficult to find something real to trade inside of it. So market is very choppy and bringing almost no patterns, which makes it a bit difficult. That's why here we could focus on just minor patterns that are forming, waiting for a major direction setting. And currently we do not have any bearish background, good bearish position, patterns, but at least something is forming on the long side, on the bullish side. That's why we are focusing on these patterns. And if you would like to try and to trade it, so you could theoretically try and to follow it because it's relatively safe, relatively simple, just because we have clear patterns, we know where the invalidation point of these patterns, where to take the position, because we done this already a million of times in our videos. So that's the patterns that we could consider. Besides, speaking about general situation, as I said, here this is not quite bearish performance, and maybe, who knows, we can't exclude this also, that this particular pattern, who knows, maybe it will become the starting point of a really big action to the upside. This is also possible. So from that standpoint of view, this step seems more or less interesting.